Welcome back to To-Tutoring.sa. Today we're going to do manufacturing or cost accounting. I've put this in grade 11 and grade 12 work as you covered this in grade 11. However, a lot of schools don't, as well as this tutorial will help you with your grade 12 work if you didn't understand the basics. Okay, so let's first explain what cost accounting or manufacturing accounting is. Normally we work with businesses such as a retailer where they sell clothes, they get the finished product, they sell the clothes to the customer. Now with manufacturing, we're going to be working with businesses that produce these clothes and then sell it to the retailer. So when we're producing goods, we need to take into consideration all the costs in order to make that item of good, make that item. So when we're doing clothes, we need to include the material, we need to include the labor, and we need to include the factory expenses in order to make that t-shirt so that we can get a proper cost of how much it cost us to produce that t-shirt before we sell it to the retailers. So what we have is we have raw material stock. This is the goods that we buy, the material that we buy in order to make these t-shirts. Then in the year, we will say, okay, the t-shirt factory can have 85% of whatever we've bought in order to make t-shirts during the year. Then that goes to our direct material. So direct material is all the material that is directly involved in the manufacturing process. The material that goes into producing that t-shirt. Okay. Then we have direct labor. Direct labor are those workers who are directly involved in producing that t-shirt. They make that t-shirt. And lastly, we have factory overheads. So factory overheads is when we're producing these t-shirts, we work in a factory. So all the costs of operating that factory need to be included in the cost of that t-shirt. Right, so direct material, direct labor, and factory overheads make up that cost of the t-shirt. We then have a work in progress account. So our work in progress account means that we're in the process of making those t-shirts. So when we make those t-shirts, as you can see, it is half done. Our t-shirts that are half done or still need to be completed will remain in our work in progress account. Okay. Once those goods are completely finished and they're completely made and ready for sale, they get transferred to our finished goods stock account. And from our finished goods stock account, we can sell them. We have that finished product and now we can sell them. So how I'm going to explain this is it's got a lot of parts. I'm going to go through each different aspect, material, labor, overheads, work in progress, and finished goods so that you can see how the general ledgers work. Okay, so I'm going to use this as the example. The information will run throughout the slides. So a company A manufactures and sells t-shirts. Based on the information provided, draw up the relevant ledger account. And what we are asked to do is find the work in progress at the end of the year. Okay, we sells 100,000 units at 10 Rand each, and our cost of sales is 20% of total sales. We then get information based on the labor, the material, and the factory in order to produce these t-shirts. So, first step, whenever we do a question, we always know we have to fill in our opening balances. Even if you don't understand these accounts yet, you know how to fill in an opening balance. So for work in progress, on the first day of the year, we have 10,000. So we go to our work in progress account, and because it's stock, it is an asset, it is like inventory, it goes on our debit side. Balance brought down 10,000 Rand. Then next we have our finished goods stock. So we see on the first it is 20,000 Rand. We bring that on the debit side because once again the stock is like inventory, it is an asset. And we also have our closing balance. So I want you to fill that closing balance in because when we give an opening and closing balance and we're working with ledger accounts, it's easy to fill those in straight away because they've given it to you for a reason. You're probably going to have to solve for a missing value. Lastly, we have raw material stock, so we go and fill that in on the debit side as well. Let's move on. Next, we come to material. So when we're dealing with material, we have 3 accounts that we work with. We have raw material stock. This is when we purchase our goods. So whenever we purchase raw material stock, it goes into our raw material stock account. Then when the company says, okay, let's say we have 100,000 rands worth of raw material stock, we can now only use 85% of it. We issue that stock. We're saying, okay, we are issuing this amount that you as the factory are allowed to use, right? Once we have issued it, we can then use however much the factory needs from the amount that is issued. So as you can see, we've already filled in the balance brought down of 10,000 Rand from the previous slide. And now we're going to go through the information. So on the 1st of January 2019, Company A purchased 100,000 Rand of material. This will go into our raw material stock because it is the account where we purchase goods. So we fill it in on the debit side because our stock is increasing and it's 100,000 Rand. Next, it says on the 1st of January 2019, we issued 90,000 Rand for use during the financial year. Now, what that means, once again, is we're saying we have this amount of stock in the raw material stock, but we're going to let the factory use 90,000 Rands worth of material. That's their budget. They can use all of it, some of it, but this is how much they're allowed to use. So what we're going to do is we're going to transfer that 90,000 from our raw material stock and put it into our raw materials issued. So to cancel it in our raw material stock account, we place it on the credit side and then we transfer it to our raw material issued account. Now we're working at the end of the year, and the next piece of information given is it says 85,000 Rand of that material was used during the year. If that 85,000 Rand of material was used, it means it is the direct material that we use to produce that t-shirt. And that amount needs to be put into our direct material account so that we know how much we actually used. So once again, we transfer it out of our raw material issued by cancelling it on the credit side and then placing it in the debit side on our direct material. It is in the debit side because it is an expense. It is the cost to produce that good. Okay, moving on. Next, we work with labor, right? So labor, direct labor, it is important to know it is only those factory workers that are directly involved in producing the t-shirts. So it says total salaries for the factory workers amounted to 89,000 Rand for the year. So how are we going to record that? We're going to put it on the salaries and it's going to go on the debit side. Okay, 89,000 Rand. It's important to know that that salaries figure is your total salaries, the amount that would be put into your expense account in the income statement. So this must be your total salaries including all your deductions. So when we give employees deductions and we have to remove it for UIF, pay as you earn, it must be included in this figure. So therefore, salary before deductions. If you're given your net salary, you need to add all your deductions to get this total figure of salaries. Everyone understand? Okay. Next we go, Company A agrees to contribute to UIF for the factory workers. Now it's very important to understand that our UIF contribution and any other contributions are placed in our direct labor. Why? It is because these are expenses to the business for labor. So we have to include it in our cost of labor. When we employ these workers, if we are contributing to the UIF, it is an expense to labor. So all contributions for direct labor workers must be included as it is an expense for direct labor. So now it says Company A agrees to contribute 1% to UIF for the factory workers. So now we need to go and calculate that. So we have to say 89,000 times 1% gives us 890. We can fill that into our direct labor account. Moving on to our factory. Now, our factory overheads are any costs that are incurred in the factory. Okay? Any cost to run and operate the factory. So in this example, we've only got 3. We have water and electricity, rent, and factory manager's salary. So let's start off with rent. Okay, let's read what it says. It says rent for the year amounts to 100,000 rand. 70% is for the factory and 30% is for selling and distribution and admin costs. Now, what's important to note is in our factory overheads, we only want expenses relating to the factory. And therefore, we have to take our total rent amount and only work out that 70% because that is how much is for the factory. The other 30% for selling and distribution and admin costs. That 30% will go into another ledger account called selling and distribution, called admin costs, to account for those costs. But they are separate and they will go into the income statement under expenses. So looking at rent, we say 100,000 rand times 70% means that our factory rent is 70,000 rand. And we place that on the debit side of factory overheads because it's an expense. Next, we're going to deal with water and electricity. So water and electricity amounts to 10,000 rand. So we include that because it's 10,000 rand to operate the factory. Lastly, we have factory manager's salary. Now, it is important that we know that the factory manager goes into factory overheads and not direct labor because they are not directly involved in producing the t-shirt. Yes, they operate the factory. They oversee processes, but they're not physically sewing, coloring, putting together these t-shirts, and therefore they're indirect labor. And indirect labor will fall part of factory overheads. Okay. Right. Next, what we have to do is all of these expenses form part of our cost for our t-shirts. And these expenses need to be transferred to our work in progress account because it shows how much we have thus far spent on producing these goods. Right. So as we know, we have filled in our balances. Balance at the beginning of the year. Balance at the end of the year is what we're working at. Now let's just look at the work in progress account. As you see it now with these 6 elements, balance brought down, direct material, direct labor, factory overheads, finished goods stock, and balance carried down. This is what your work in progress account will always look like. So if you want to do anything and you want to guarantee those marks, first thing you can do is draw up your work in progress account and place these items in your work in progress account as you see it here. And this is how you know what you need to find in order to complete the work in progress account. Okay, so now that we've worked out our direct material, our direct labor, and our factory overheads, at the end of the year, we close these accounts off to the work in progress by cancelling them on the credit side and placing them in the debit side of the work in progress account. So first we're going to do direct material. So we cancel the 85,000 and we transfer it to work in progress account. Next, we do direct labor. We total it. It gives us 89,890. We transfer that to our direct labor and our work in progress. And lastly, we do our factory overhead. So we add all our factory overheads up and transfer that to our work in progress account. Okay. Now, what we can see is that we have been asked to work out our balance carried down, correct? However, in order to work out that balance carried down, we need to know what our finished goods stock amount is. So like I said, once all the goods have been produced, whatever is finished at the end of the year is transferred to our finished goods stock because it means that those amounts of items are ready to be sold. So they're not in progress anymore. They're not being created. They're ready to be sold. They are finished. So therefore, we need to transfer those goods out. We don't know that figure, and therefore we need to go back to our finished goods stock ledger in order to work out this amount and work backwards in order to find our work in progress carried down at the end of the year. Okay. Right. Now, before I explain the finished goods stock account, I want us to look at a normal sale. and this will help you understand. So normally when we have sales, this is how we would record it. Company B sold 20 apples at 10 Rand each for cash. So when we record that sale, we record it on the credit side and we say 20 times 10 because we sold 20 units at 10 Rand each, which would give us 200. And we put it on the credit side and we put it on the debit side of bank because we are earning that cash. So there is our counter account. And then goes further to say for cash, and then cost of sales is 100 Rand. So what we know is we have inventory of 400 that costs 400 Rand, but now we're selling it. And therefore, if we're selling those apples, we are decreasing how much inventory we have by 100 Rand, and our cost of sales increase by 100 Rand. So therefore, we have to carry out or transfer out of that inventory account 100 Rands worth of goods and put it in our cost of sales. This shows us that at the end, we only have 300 Rands worth of goods left to sell. Okay, now when we're doing manufacturing accounting, this process works exactly the same way, except we do not have an inventory account. Instead, we have a finished goods stock account. So we would work sales exactly the same way, cost of sales exactly the same way, except cost of sales now account is not counter account is not inventory, but rather finished goods stock. Okay. So let's work with this. Finished goods stock and cost of sales. We can use cost of sales to work out finished goods stock, working backwards to understand the amount transferred from the work in progress. So company A sold 100,000 Rands of units, 100,000 units at 10 Rand each during the current financial year. The cost of sales is calculated at 20% of sales. So looking at our finished goods stock account, before we go further, these 4 elements will always be in the count. So I want you to straight away, like we did our work in progress account where we drew it up with the 6 elements, I want you to draw up the finished goods stock with these 4 elements. So you know the counter counts and where everything has to be placed. When you have it all on one sheet, you can see how the different accounts connect to each other and how you can work backwards to find that work in progress at the end of the year. Right, so as we can see, we have the balance brought down and the balance carried down as we did in the first slide. We then have work in progress. So this is the amount that is transferred out of that work in progress account to say this is how many goods we have completed during the year. And then we have cost of sales. Now remember, like I said in the previous one, we record sales. So we also have to record cost of sales, and our counter account for cost of sales is now finished goods stock. So the first thing we have to do is go and work out our cost of sales amount. And what we say is sales is 100,000 units times 10 Rand each, which gives us 1,000,000 Rands worth of sales. And our cost of sales was told to us that it was 20% of our total sales. And therefore our cost of sales is 200,000 Rand. So what we go and do is we go and fill that in our cost of sales amount. But we need to understand where that cost of sales came from, and that cost of sales came from our finished goods stock. So we record the cost of sales in the account of 200,000 Rand, and the counter account is finished goods stock because we are removing that 200,000 Rand from finished goods stock. We can know as it's been sold, so it's not there anymore for us to sell in the future. Right. Next step is we have one missing value in our finished goods stock account, and that is our work in progress. Now we need that work in progress amount so that we can go and fill it in the work in progress account and solve for the work in progress at the end of the year. So what we go and do is we go and we say, we add up and total each side of the debit and credit side, and we work out that our total is 205,000 because each side, debit and credit, have to balance. Now that we know our total is 205,000 and on the debit side we already have 20,000, we say 205,000 minus 20,000 gives us our work in progress figure of 185,000 Rand. Okay. Now that we have completed the finished goods stock account, we can fill it in the work in progress and solve for work in progress at the end of the year. So we have that finished goods stock account, 185,000, and we know that came from our work in progress account, so we go and fill it in. Okay. Now what we have is we only have to solve for that balance carried down, which is what the question asked us to figure out. So what we do is we total each side, giving us 289,890 as our total, and then we can minus 185,000 from that on the credit side, which gives us a balance carried down of 104,890. So that is our work in progress at the end of the year. So it's important to understand how these accounts function, specifically work in progress and finished goods stock. Understand how they link to each other. Often they're either going to leave out something in your finished goods stock account, or they're going to leave out something in your work in progress account. And through this process, you're going to have to work either forwards or backwards to calculate that missing figure. Thanks for watching the video. Please leave any comments below. If you have any questions, also let me know. Like I said, this video is for grade 11 work. However, a lot of matrics haven't done this work in grade 11. So I advise you to watch it. It will help you with your production cost statements. Thank you.